Dunkin is placing a huge bet on coffee. When you walk into a Dunkin today, you'll notice way more coffee options and far fewer donuts than you would have just a few years ago. And it's not just drip coffee on the menu anymore. There's everything from cinnamon sugar pumpkin lattes to culottes to premium espresso. At the chain's newest stores, you'll even find nitro cold brew on tap. It's all part of Dunkin's $100 million investment to refresh the brand and become a major player in coffee. CEO Dave Hoffmann believes espresso is key to fueling the company's long-term growth. The aggressive push into beverages comes at a time when the coffee wars are heating up. Competitors like McDonald's are slashing prices through deals, while coffee giant Starbucks is taking bets on more expensive drinks, a revamped loyalty program, and delivery. But Dunkin's rebrand strategy encompasses more than just coffee. The company also wants to aggressively expand across the country and revamp its restaurants with new technology. The chain changed its name, simplified its menu, and started rolling out new store designs. It got a new CEO and made some changes to leadership at the top. Dunkin needs this strategy to work. Traffic in stores has slowed, and annual comparable store sales at Dunkin took a 1% dip in 2017. While slow traffic and lagging same-store sales aren't unique to Dunkin, they are dialing up pressure on the chain. So will that $100 million investment be enough to fuel Dunkin's move into the big leagues with McDonald's and Starbucks? Or will the hit to profits just cost the company in the end? Dunkin got its start here in Quincy, Massachusetts. When Bill Rosenberg left school in the 8th grade, he dabbled in catering, but soon realized 40% of his revenue came from two simple products: coffee and pastry. In 1948, Rosenberg opened a restaurant that sold 5-cent donuts and 10-cent cups of coffee. 2 years later, Rosenberg renamed the restaurant Dunkin Donuts. The restaurant was a hit. In 1955, the first Dunkin Donuts franchise opened. That same year, the first McDonald's franchise opened too. By 1963, Dunkin Donuts opened its 100th location.
This is one of the original publicly traded 100% franchise businesses. I mean, it's a true asset-light model versus, McDonald's is, trending towards, it's 92 or 93% franchised globally, moving towards 95, and Wendy's is 95%, but they weren't there 5 years ago. Whereas Dunkin, when it went public, I think in 2011, it was already 100% franchised, and it really built the appreciation for those types of businesses in the industry.
That growth model worked well for Dunkin. Franchising meant fewer actual assets and higher profits. Dunkin started expanding internationally in 1970 when it opened its first overseas location in Japan. As of Q2 2019, there are over 12,800 Dunkin locations in more than 40 countries. Dunkin Brands went public in 2011, selling around $423 million worth of shares. For comparison, Chipotle raised $193 million when it went public in 2006, when adjusted to 2011 dollars. Then CEO Nigel Travis told CNBC the company would use profits from its IPO to expand west and internationally and pay down its debt. Analysts said the stock was overvalued because its price hinged on the hope that Dunkin would recreate its success in the Northeast across the rest of the country. At the time of the IPO, there was only one Dunkin Donuts on the West Coast, in Portland, Oregon. The company has since expanded its West Coast presence with 102 locations in California and 12 in Hawaii as of 2019. But even as Dunkin has pushed to grow its footprint west of the Mississippi and internationally, it hasn't forgotten about the Northeast. Dunkin is the largest chain in New York City for the 10th consecutive year, with 624 locations as of December 2018. In 2018, after 70 years of Dunkin Donuts, the restaurant dropped the donuts and became just Dunkin.
We think about it less about dropping donuts than just leaning into Dunkin. Dunkin is what we're known as for almost 20 years. We've been America Runs on Dunkin.
Beverage sales make up almost 60% of Dunkin's revenue, so growth in the category is essential to the company's overall health. In 2017, Dunkin told Nation's Restaurant News that most stores would offer fewer than 20 different donuts. That was a big decrease from the 30 varieties it typically offers. While Dunkin has simplified its food offerings, it keeps adding to its coffee menu. For about 45 years, Dunkin's coffee offerings extended only to its original blend drip coffee, but in 1997, Dunkin decided to make a big push into the beverage market. That was the year it rolled out the coffee culotta slush drink. In 2000, Dunkin started selling the blended Dunkachino, and by 2003, it began to offer espresso. Dunkin relaunched its espresso lineup in 2018 with new machines, new recipes, and new training for employees. It's a move some say has a whole lot to do with Dunkin angling to become a premier brand, on par with Starbucks.
I think that the initiative to modernize would absolutely come from their largest competitor, which is Starbucks, which has really reinvented what coffee means to consumers on a daily basis. So yeah, it's always good to kind of have an arch enemy, if you will, out there, a bad guy, whatever you want to call them, because they force you to stay on your toes.
It seems to be working. Espresso sales for Dunkin are on a tear. In its annual report for fiscal year 2018, Dunkin US said it sells approximately 1.7 billion servings of hot and iced coffee each year, and espresso accounts for about 10% of Dunkin's overall sales mix. The company reported sales of espresso-based beverages were up 40% in the second quarter of 2019 when compared to the year prior.
That move into the espresso beverages, this is a space that their key competitor really owned and had an advantage over them. Think about the length of an order that somebody might give a barista at a Starbucks, for example, versus just a cup of coffee at Dunkin.
But Dunkin can't just mimic Starbucks to succeed. It needs to stay true to its brand. Dunkin is all about a quick, affordable menu and making trends accessible to everyone. That's not necessarily a natural fit with espresso. So analysts warn that Dunkin has to be careful about its move into espresso. Customers are typically suspicious when a brand tries to do something that doesn't feel authentic. But if Dunkin's espresso-based beverage sales so far are any indicator, this product could unlock big potential for the chain. However, coffee remains a crowded market, and Dunkin is fighting for market share against some formidable opponents. Starbucks with its vast footprint, McDonald's with all-day breakfast, and the regional but beloved Tim Hortons and Krispy Kreme. As of September 2019, Dunkin has a $6.8 billion market cap, and its shares are up about 8% over the last 12 months. But it still has a ways to go to compete with giants like McDonald's and Starbucks, which have about a $167 billion and $115 billion market cap, respectively, as of September 2019. In fiscal year 2018, Dunkin US's sales were also dwarfed by the competition. Dunkin reported revenues of $606.8 million. McDonald's sales were more than 12 times that, and Starbucks brought in $16.7 billion in the Americas, which includes the US, Canada, and Latin America. Espresso is a premium product and typically costs more than other beverages. That means it pushes the average check price higher, which in turn makes up for slowing traffic because people are spending more when they do walk through the door. In 2018, a party's average check at Dunkin was $8.05. That's higher than its Canadian competitor Tim Hortons, but lower than Starbucks. The most recent check averages don't include 2019 data, so it may be too soon to measure Dunkin's revamped espresso lineup, which started to roll out at the end of 2018. Dunkin has long struggled with how to drive up afternoon foot traffic. It has extended cold beverage offerings and offered deals ranging from 2 bagels for $4 to $2 lattes.
The beverages in the morning, that's their core, and that's where the franchisees make their money. But as far as the afternoon business is concerned, the Dunkin' Run and the Go-Tos, a lot of times those promotions, if they are on beverages, they're usually after 2 o'clock in the afternoon. So, the afternoon run seems to be stabilizing the afternoon business.
Dunkin' Brands has also tried, and arguably failed, at using ice cream to drum up afternoon sales. Baskin-Robbins and Dunkin' are both operated under Dunkin' Brands, but Baskin hasn't performed as well as Dunkin'. Its sales growth has been lackluster. From 2007 up until it changed course in 2011, the chain posted negative annual comparable store sales. Baskin-Robbins again posted negative same-store sales for the fiscal year 2018. Analysts say Baskin might not be adding much in sales to the brand, but it's not really dead weight either. A dual store with both a Baskin and a Dunkin is attractive to some franchisees to boost sales outside the morning coffee rush. A dual store costs as little as $10,000 more to open than a standalone Dunkin' and doesn't require extra workers or machinery. Dunkin' is also trying to keep up with change in the fast food industry by testing plant-based meat and a partnership with Grubhub in some locations.
The online ordering system now is much more robust, and our guests can get products anytime they want, anywhere they want. And we're living in a culture now of everything being on demand. Now you can get your coffee on demand.
Dunkin' started offering Beyond Meat's sausage in Manhattan, and the company says it's selling well and drawing repeat customers to Dunkin'. Dunkin' has been testing delivery through partnerships with Grubhub, DoorDash, and other local companies. It plans to expand the partnership with Grubhub to other major cities in the U.S.
Consistency of experience. It's not a big deal when you're ordering from a mom and pop pizza or taco place, but for us, the consistency is really important.
But there are unique challenges in delivering coffee. Experts say Dunkin' and other cafes might not be a natural fit for delivery because coffee has to maintain its temperature to be appealing. Think watery iced coffee or a room temperature latte. It's also betting big on store format. Part of that $100 million cash injection went toward the rollout of an entirely new kind of Dunkin' shop. It's a layout called the Next Generation Store, and Dunkin' hopes it will modernize the brand's image and keep it relevant to the next generation of customers. Dunkin' plans to add 200 to 250 net new restaurants a year for 3 years, starting in 2019.
It completely changes the way the customer interacts with our crews. There's nothing between the crews and the customers, so the customers can now engage with our crews and ask questions and learn about the product.
Dunkin' says the new store is slightly more expensive than previous remodels because there's more technology in this design. The company didn't disclose the cost of the new layout to CNBC.
The returns are actually very exciting and better than the previous iterations. So working very closely with our franchisees, we've gotten to a place that we feel very good, both sides, on the investment that they'll be making for this next-gen transformation.
Next-gen stores are also a big part of Dunkin's push to digital ordering. Mobile ordering is another area where Starbucks has Dunkin' beat. About 4% of orders at Dunkin' are made through mobile phones. At Starbucks, the number is closer to 16%. Experts are optimistic that the next-gen store will improve that metric. The designs have a larger space for people who are picking up online orders.
And the next-gen store has an even bigger area dedicated to this, and we're seeing probably, twice the average percentage of on-the-go orders through the next-gen stores, which is tremendous.
Some of the new stores also have a dedicated mobile lane in the drive-thru. That should help prevent bottleneck issues like the ones seen in some Starbucks when the company added mobile ordering in 2017. Next-gen stores also have an 8-tap system for cold drinks. Just like the donut cases, it's all about getting products in front of customers to increase how much they spend. With drinks on tap, crew members function more like bartenders than baristas.
Bartenders, quick on their feet, they know your name, they know how to sample drinks, but most importantly, they're great at serving the customer.
As of 2019, customers rated the barista expertise at Dunkin' at a 90 out of 100. Starbucks scored at 94 out of 100, while McDonald's was lower at 78. In its next-gen stores, Dunkin' hopes that number will go up. Dunkin' has been a reliable brand throughout its existence, growing at a slow and steady rate. It hasn't had any major scandals like some of its competitors, and its franchisee relationship is strong. So how has Dunkin' maintained solid and steady growth? One expert says it all comes down to loyalty. Dunkin' ranks pretty high in satisfaction, slightly below Starbucks, but above McDonald's, according to the American Consumer Satisfaction Index. But if satisfaction is a moment in time, loyalty tells the future. And it is a metric where Dunkin' shines. For the 13 years through 2019, Dunkin' has ranked #1 in consumer loyalty in the out-of-home coffee provider category. In the packaged coffee category, it's been #1 for 8 years. That's no easy task in a field as competitive as coffee. Robert Pasikoff, whose firm measures consumer loyalty, says having highly loyal customers ensures that they'll come back again and again and again.
When we look at all of the metrics against all of the drivers, against all the expectations, is up at about 95%. That's pretty good. You look at someone like Starbucks, and they are a little bit lower.
And loyalty is valuable to a brand for more than just its bottom line. Loyal customers are more likely to buy products associated with the brand, recommend the brand to others, and invest in publicly traded stocks. Despite low traffic and intense coffee competition, Dunkin is betting that new logos, sparkling espresso machines, and trendy partnerships will be enough to help it grow up.